Sell-off ahead, of course, of the Microsoft numbers due any minute now. Have we pulled back enough?
Probably not, although we're certainly getting closer. I mean, the big multiple compression is obviously well behind us. We've seen such a big fall in some of the big tech names and some of the profitless names of the IPO wave of the last 2 years. I think we're getting closer to the bottom. I'm not calling that today, but I think you're going to start to see investors pick through some of the rubble of their names where they feel like they have good strategies, good management teams, good prospects. I'd expect we're closer to the bottom than a lot of investors think, and I'm optimistic for the rest of the year, albeit we will be choppy through the rest of the quarter.
Why do you say that we're closer to the bottom, Mark? What, is it encouraging, for instance, that we've had these dip buyers come in at these extreme, seemingly oversold levels? Is it the rebound action, or do those swings make you nervous? Because that is something typically characteristic of a down market.
Yeah, I'd say both, Sarah. Listen, I think we're clearly not done with the volatility. Today's a perfect example. The last couple of days are a perfect example. The VIX over 30 tells you it's not behind us. But I think we're going to see the kind of separation like we've seen in past bear markets. Look at the beginning of 2016. SaaS stocks were down about 30 or 40% in the first 2 or 3 months of the year. And then we saw huge M&A activity. We saw huge private equity swoop in. We've yet to see any of that. My sense is that there's plenty of buyers on the sidelines, and that's what I'm looking for. We haven't even seen a whiff of that. I'm not saying the whole market's going to come right back and we're going to go back to all-time highs for everything, but I'd be paying particular attention to the class of the last 2 years of IPOs, and you're going to be happy you did.